Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com, and this is Friday night's video, January 23rd, Sunday afternoon I'm doing it. Okay, let's talk about the market. Friday morning started out down 200 points. Got right back down to that, what I call the brink. We've been there probably 3 or 4 times in the last 4 or 5 days, and it seems that each time we get down there we do get a pretty decent rally off of those lows. So it tells me that there is some kind of support down there. I mean, 3 or 4 times we've been there, 3 or 4 times we've bounced off of it. What's missing is any kind of a follow-through to the rally. We seem to get to the top end of the trading range for the past 5 days, and then we have to retest the lower end. So there's starting to become a congested area there. Something's going to give one way or the other. There's a lot of doubt out there about the market and a lot of fear, and rightly so if you listen to the news. But I'm focusing on that big support area that was put in after the 9/11 problem. So that's what I'm focused on. I'm not really focused on the news. I do see some technical evidence that there is support down there based on the fact that we've rallied out of there 3 or 4 times. Probably next week we may get a resolution to the issue, but I'm willing to give the market still the benefit of the doubt, and I'm sitting on my hands and I'm just waiting. So we'll see what happens next week. We'll take a look at all the major indexes, show you what I just spoke about, because a picture's worth 1,000 words. So in just a moment we'll take a look at all the major indexes, so don't go away. Okay, once again we're looking at a daily bar chart of the Dow Jones averages, and you can see that there's been battle going on here for the last 3 or 4 days. They knock them down here and they rally back up. And this is the key area, this area right here, and this low right here, which is the 2003 low. And it makes sense for a battle to be going on here. And although you cannot see, or I cannot see, any kind of a turnaround off of this pullback right now, I still believe the potential is there. And I'm going to walk you through the reasons why. But in order to do that, I'm going to have to take you back, as I did on was Wednesday or Thursday, to the monthly chart. And I'll walk you through my reasoning here. Okay. All right. Here we have the Dow on a monthly basis. This is the 2003 low. It's also the 98 low. It's this support area here. Pull back, new high. Pull back again in the 2003 after 9/11, and then a hold the bull phase, and now we're right back down here again. So it just makes sense to me that this is a very important support area, and before it just goes right through it, it's got to have some kind of reaction to the upside prior to that. But really what's important here is what I really want to talk about is vacuums. And a few months back in one of my videos I talked to you about a vacuum. And I explained it in a way that if the market goes down fast and furious in a straight line or up, doesn't matter where the vacuum is created, that there's most times a counter move to the vacuum. In other words, the vacuum needs to get filled before the market can then go on about its business. So I want to point out a couple of these events and show you the counter moves. First, we're going to start with an up vacuum, which was right here, and you can see that you finally had the counter move back. You need to fill the vacuum. Here we had a big vacuum, and we spent a lot of time filling it all the way, a number of years. But even along the way, we had a number of vacuums within this pullback. We had a vacuum here, and we filled it. We had another vacuum here, and we filled it. We had another vacuum here, and we filled it with a whole bull phase. Well, once again, take a look at our chart here, and look at this vacuum that we're in right now. And this is the reason why I say the potential is there for a counter move back up to fill this vacuum. Somewhere would make sense to me would be back up into this area here. Now, I'm not saying it's going to take, it's going to happen immediately. I'm saying that the potential is there, and on a short-term basis, on the daily basis, we cannot see it developing yet. But on a longer-term basis, the theory is there, and to me, it makes a lot of sense. So let's move on to a couple of others and see if we can't see a similar. Here we have the Russell 2000. This is a monthly chart. This is the 2003 low. You can see it held here, here, and here. Now we're not quite down to the bottom, so you might want to say that this index is a bit technically stronger than the Dow, because the Dow has reached the bottom end of the support area. But what is similar is the vacuum here. Look at this huge vacuum. This is probably one of the biggest vacuums I've ever seen, except for the 87 crash, which was here, and that created a vacuum. I'm sorry, that's not the 87 crash. I'll point it out in the Dow, but it's a similar vacuum and back up again. It seems that every time we get these huge vacuums, you get these counter moves, and we're in a vacuum here. You can clearly see it. And that's why I say the potential is there for a counter move back to the upside. All right, I'm jumping back to the Dow Jones monthly chart. I do want to show you the 87 crash and the vacuum that was created. Look at this, straight down in 1 month, and yet the vacuum had to get filled, and it did. Another vacuum here, straight down and back up. So these vacuums, I would say, a high percentage of times do get filled, and I don't think that this vacuum right here that we're in is going to be any different than the ones that we've looked at so far. I can't find one that hasn't been filled. So the evidence is clearly there that the odds, I think, are pretty high that this vacuum will get filled. A quick look at the monthly SPY chart, which is basically the Standard & Poor's 500. Similar to the Dow, the fact that this is the 2002 low. And, you know, we had our up vacuum and our counter move. Another big up move and 2 years of pulling back. But within that pullback, another vacuum, another fill. Another vacuum, another fill. Another vacuum, and a huge fill. Okay, and here we are again in a vacuum. And this is a picture of the monthly bar chart of the QQQQQs, top 100 NASDAQ stocks. And although we haven't gotten down to the 2002-3 low area, this is the low that was made at the break of the dot-com bubble. You might say this is a little technically stronger than the Dow, but it's similar to the Russell 2000. But what's similar to this chart and all the others we've just looked at is this big vacuum that we're in. And that's why I say the potential is clearly there to have some sort of a counter move back up. Okay, and there's one more comparison I want to make. This is a daily bar chart of Google. You know, it's one of the premier stocks in the index. I would say it's a bellwether of the market. And I want to point out the similarity between this pattern and the pattern that we've looked at in the Qs and the Russell 2000 chart, that being the support area. And on Thursday and Friday, we were able to break this downtrend with a decent move. So little by little, I'm starting to pick up a little bit of evidence that that possibly on a short-term basis, we are starting to see some sort of strength come back into the market. Now, on a long-term scale, I believe somewhere down the road it is going to happen, but on a daily basis, it's very difficult to see. But I want to point out the fact that that Google is starting to pop its head back up again. So. Just another piece of evidence I wanted to point out. Okay, so that's my view of the market. Until Monday, this is TK signing off.